I'd pick this one ETF to buy and hold forever. I get asked all the time, what's one ETF I would buy and hold forever since I invest my entire portfolio in only ETFs, and it's a very popular question on the internet. For some of you who know me, you'll know my answer to this question right away. But I have a few criteria to find out which ETFs are a buy and hold forever type of fund. If I had to choose only one for a one ETF portfolio that you can go 100% of your money all in on. And by the end of this video, you'll know my answer, so let's get started. Right out of the gate, the ETFs that I would not buy and hold forever are going to be specialty ETFs or ETFs with a super high concentration to only one sector of the stock market. For example, ETFs that have only technology, only healthcare, only banks, only semiconductors, only Bitcoin, only real estate, and you get the point. These types of funds I would not put all of my money in, since it lacks diversification and you have a very high amount of risk with super high concentrations like this. I find diversification really important, especially when investing. Because when you diversify your investments, you reduce the amount of risk you're exposed to in order to maximize your long-term returns. Long story short, diversification equals lower risk, which should mean that you should have some more reliable and stable returns in the long run. I would also have no covered call ETFs because the goal of long-term investing is to maximize your total return potential. When you invest in covered call ETFs, they can be excellent for generating high income in the form of dividends or collecting premiums, but the catch is covered call ETFs do limit your upside potential and overall really affect your long-term returns. For example, if I invested in QYLD, a NASDAQ 100 covered call ETF, despite it having a high dividend yield of over 10%, where it provides exposure to the NASDAQ 100, which is the exact same ETF that invests those QQQ tracks without a covered call strategy, you would have made significantly way more money with QQQ than QYLD over the last 5 and 10 years by a very wide margin. So unfortunately, I would not be buying covered call ETFs to buy and hold forever either. With all that out of the way, here's my criteria for choosing only one ETF to buy and hold forever. Number 1 is diversification. For example, if the ETF has hundreds of stocks from different sectors of the stock market, I like those a lot. Number 2 is a positive track record of returns from at least the last 10 years, which should indicate that the fund has a good methodology and one that might see positive returns as well in the future. Number 3 is lastly a low expense ratio, which is great because the lower the expense ratio, the more money you get to keep when it's all said and done. Now there's only 3 ETFs that fit all these criterias, and I'll go over all of the ETFs that fit those respective categories and the winner of this video for that one ETF to buy and hold forever, because in reality there's only one winner in my opinion. The 3 categories are broad market ETFs, dividend ETFs, and lastly growth ETFs, where the winner is easily going to be broad market ETFs, but everybody has their own risk tolerances, preferences, goals, etc. so it all depends on your own preference. If you want the most diversification with some of the most reliable yet strongest returns in the stock market, then a broad market ETF could be right for you. If you want consistent dividend income in retirement with stocks that pay a very high dividend yield, then go for a dividend ETF. And finally, if you have a higher risk tolerance, want a chance at the highest returns in the stock market, and don't care about high volatility, then go for a growth ETF because it could be the best choice for you. So I'm going to be plugging in all 3 of these ETFs into a totally new criteria of total return potential, volatility, risk, and my own star ranking out of 5 from least likely to buy and hold forever to most likely to buy and hold forever. The first category is that broad market ETF. 3 of the best I like are VU, which tracks the S&P 500 or 500 of the largest US companies, VTI, which tracks every single stock in the USA, and VT, which tracks every single stock in the world, so you have both US and international stocks. Here's a list of alternatives to the ones I just listed that can be buy and hold forever in this category. I obviously love this category because I have a ton of VU in my brokerage account and in my Roth IRA, as well as VTI in my 401k. I think that broad market ETFs should be a staple in everybody's portfolio, and just the holy grail of ETF categories. They are the best for that peace of mind and my pick for the ETF to buy and hold forever. Total return potential is medium. Since broad market ETFs tend to provide steady and stable returns, where it's not meant to outperform the market nor underperform it as well. Volatility is also going to be medium. Since broad market ETFs have a long history of reliable returns in both bull markets and even bear markets. Risk is going to be medium since Vanguard has all three of these funds at a 4 out of 5 on their risk scale. And remember, these are stocks. No stock is low risk. If you want low risk, then go to bonds, a high yield savings account, or just a money market fund if you really want low risk. Overall, I give broad market ETFs a 5-star ranking since they are extremely diversified, have a long history of strong returns of over 10.5% since 1957 for the S&P 500 for example, and have very low expense ratios to tie it all in one big bow. The next category is the dividend category for all you dividend lovers who want to make money as easily as possible and who want that sweet dividend income. Here's 3 of the best I like, such as schd, a very high quality dividend ETF, DGRO, a dividend growth ETF, and lastly VIG, a dividend appreciation ETF. Here's a list of alternatives to the ones I just listed that can be buy and hold forever in this category. The total return potential for this category is medium. Dividend ETFs usually do not outperform broad market ETFs or even growth ETFs. Now, dividend stocks don't reinvest their profits back into their business to grow and expand it. Instead, they pay out those profits as a dividend to you as a shareholder, which does limit their growth potential. However, ETFs like DGRO, schd, and VIG, for example, have dividend growth, which means you get paid more dividends every single year, which can be very lucrative in the long run. Volatility is going to be medium. Since dividend ETFs have way lower betas compared to a broad market ETF or even a growth ETF, so they're going to be way less volatile. They have companies that have been around for decades upon decades with large profits, wide moats, great competitive advantage, and overall will still be around in the future. Risk is also going to be a medium as well. Overall, I give dividend ETFs a 4-star ranking out of 5. They have a long history of strong and stable returns, diversification, and of course low expense ratios. The last category is the growth ETF category, which is a category that carries the highest amount of risk, but also the highest amount of possible returns that you can get in the stock market. So more risk should equal more returns, sorta. Here's 3 of the best I like, such as SCHG, a large cap growth ETF, QQQM, a Nasdaq 100 ETF, and SPMO, a momentum based ETF. The total return potential for this category is high. SCHG, for example, has had an average yearly return of over 20% over the last 5 years, and the Nasdaq 100 or the QQQ has had the same return as well, over 20% over the last 5 years as well, and SPMO is crushing it at around 50% returns in just the last year, with tech companies leading the market's returns like Apple, Microsoft, Meta, Tesla, Nvidia, Broadcom, and so much more. Technology is always innovating and will be here forever basically, so I could see growth ETFs continuing to crush it in the future. Volatility is also going to be high. Growth ETFs have super high betas, so they're going to be way more volatile than practically any ETF in the stock market. Growth ETFs can not only go up to the moon, but they can also crash in terms of their returns just as hard and fast. Risk is easily going to be high. Growth ETFs compared to a dividend or a broad market ETF are going to be way more risky, and they're also going to be way less diversified. They also have high concentrations to volatile stocks like tech stocks, which can also lead their stock prices to go up and down very rapidly. Overall, growth ETFs get a 4-star ranking out of 5. They have good diversification, but not the best. They also have a long history of stable and strong returns, and overall, they also do provide low expense ratios. If you guys want to see my entire ETF portfolio where I have over $150,000 in ETFs, you can download the Blossom app using the link in the description of this video and see my entire ETF portfolio for completely free with Blossom. If you guys like this video, please give it a like because this cute puppy did. Now right here is going to be a video on my latest update of my entire ETF portfolio on how much I have in each ETF that I own. Now right here is going to be a video on some of the best ETFs for 2025. Have a great rest of your week, continue to crush in the stock market, and take it easy. Peace.